All right, welcome everybody to the Wednesday edition of the Quantitative Q&A. It's me, William ABJ. um, we are going to go over what happened yesterday, and we're going to go over what happened today. Very similar viewpoints for the exposures compared from yesterday to towards today. Both days, though, I know we're very used to looking at just the length of a candle on the exposure portion, but what I think most traders utilizing exposures are missing out on is actually looking at the numbers, right? Actually looking at how much exposure exists and what do we deem as a strong level of support and resistance based on delta. And so yesterday, let's just bring up the chart real quick. You guys can see, and if you guys recall how we traded yesterday. So we're looking at this block right here. I will draw it on the, yeah, we're looking at this block right here. That's yesterday, right? So we saw that yesterday. We kind of tried to make a leg up towards the 7150. Things did not work out. If you remember what we did when we got around this area here, the VWAP, we changed our trade structure, right? So we originally had an iron condor, and we flipped that entire iron condor to being full short. So fully short selling, taking all the put side value and selling calls because we knew that the likelihood of a flip right now in bias, in trend, well, it was more likely than the market continuing to go upwards based on delta. And then we had today, right, where a whole lot of nothing happened all the way until like, I'd say like end of the day. But generally, I wouldn't even say this is much because the entire day we moved 30 points. So that's not a lot of price action for us traders to take advantage of. And now if you were short options like myself and a lot of us in the team, you would have seen that collecting credit today would have been like the easiest thing to do. You know, just slap on some spreads, collect premiums, and just chill out for the rest of the day. But even then, right, the deltas and the exposure profile didn't tell us that we should be putting on large size because the market right now seems to be waiting for some sort of catalyst to tell us when we should put on size. Right now, you guys know that I follow a very strict portfolio structure. When volatility isn't too high, I'm also going to be risking off as well. It's not giving me the opportunities to put on a lot of size. So 5 contracts up to 10 contracts, that's kind of like my hand sizes right now. When volatility starts to rise up above the 19 again, probably come back to 20s, we'll probably put on the 25 contracts that we normally like to put on. But yeah, so recapping this one, we're going to talk about yesterday first. So if we are to look at the Greeks, I've already brought the page to yesterday, so the 21st. This is the open of the market. Now we know that something that I always reference in terms of the exposures, I always ask you guys, like, if you were to imagine this as an army, right? Which side of the army are you looking to join? Would it be green army or would it be red army, right? It's very obvious that we should be joining green army, but there's also a number. There's also a number that we talk about that we reference in terms of joining a side, right? So we can see that that number is not met. The number is a billion, and then the next number is 2.5 billion. Generally, 2.5 billion in delta exposure tells us that intraday that is going to be a strong level of support or resistance if it's red, right? It tells us that if we're going to participate in the market, the easiest first trade that we can do is actually put on a credit spread beyond those levels of support and resistance, right? So let's say if 7100 strike, for example, let's just say that this was at 2.5 billion, I would have a fair bit of confidence saying and stating for the stream that price is not likely going to end below 7100 because there's so many existing long deltas at this strike. What we see on the 21st is nothing, right? A whole lot of nothing. This is anything under a billion generally for market makers and large market participants. It's very easy for them to flip that amount of delta. It doesn't cost them that much money. I know when we talk about this in terms of raw dollar value, it does seem like a lot to us retail traders with not that much money, right? I don't know what kind of portfolio you guys are working with, but even with myself, right? I'm not a huge trader, but I know that in the pocketbooks of the big guys, under a billion, very easy to flip. So I want you to bear in mind, like this is 9:30 a.m. EST, okay? As the market kind of traverses forward, I want to show you guys what changes around like the 10ish mark, right? So here is the delta profile, just a little bit further down down the day. So 10:44, 10:45, you can kind of start seeing like what's changing, right? And earlier, this was all green, right? This told us that we should be bullish, but again, if we look at the numbers, the raw values of it, it's just non-existent. Very easy for the market to flip this entire area into red. So when we are started to see this already around the break of open price, so I'm gonna bring back the chart here. Around open price right here, we already started to just make that decision that okay, this is probably not going to be, we're probably not in the right direction right here. So right there, we're probably not in the right direction. Market is likely going to probably make a flip. The over and under is yesterday's closing, right? Yesterday's closing price. So as soon as SPX turned red, we're like, okay, we got to flip our bias. Iron condor is not working out. The put side's in danger of being exposed and becoming in the money for our short credit spread, and we should just reverse that. So take all the capital that we spent on puts and flip it to the call side, collect the premiums there, understanding that it's not likely that the market's going to come back and have a green day, right? So some of the targets that we saw down low though, what were they? They were 770 and then 70 70 and then they were 70.65, right? So when we made those calls on stream, where do we get those numbers from? Do we just kind of willy-nilly grab them out of a hat and we just say, this gonna do this because I said so? No, right? So if we look at VANA, we look at Gamma, right? If we remember, VANA and Gamma are our forward-looking Greeks, right? These are the second order Greeks that tell us where value in out of the money contracts are, right? So I'm going to zoom forward. We can see that we start traversing in negative, right? Negative delta territory. We start inching into negative gamma territory, negative VANA territory, right? And what's our first, just looking at it, what's our first target for price, right? 70.70. And we got there. And then after 70.70, we know that price came a little bit further too. And it ended at our new MVC, which was created way after. It was 70.65, I believe. Yeah, 70.65 became the rival. Right, so this is kind of how, there you go. There's 70.65 at the end of the day. That's kind of what we use this data to tell us, right? So for someone who was asking earlier, why are we not just looking at what Trump is saying? News is important. Catalysts are important. They do flip the data here and there. It depends. No one can predict news. That's more of like a reactionary discussion that you would have for what we like to do, right? There's two kinds of trades. You can either put on a reactionary trade or you can put on a predictionary trade, right? Both make money. You can focus on both too, right? And so we can use the data to kind of tell us what the likelihoods of something happening or is or not, right? So on this day, I know that we sold, the idea was to sell 70.20, right? So if you look at the chart, just tell me what are the odds of the market coming all the way down to 70.20 when we know that the likelihood of 70.70 was the max bottom, and then afterwards 70.65, right? But how much time would it take for us to come all the way down here, right? So again, the person who was asking about data, well, we know that the market can only go so far in one direction, and a lot of the values are foretold to us by this, right? The market's not gonna push further than majority of the time. It's not gonna push further than gamma values, like the most valuable contract. It takes a lot of effort for the market to do so, and it costs them a lot of money to do so as well. So why would they push the market further if they're not going to be rewarded for that effort, right? So what is the effort, right? We know that the most valuable contract is the contract that's set to pay the trader or whoever is holding this contract the most as price moves towards it. So why would they move price further than 70.65 or even 70.70 if there's no value in 70.60, 70.50, 70.20, right? It doesn't make any sense, right? So that's one thing. So that's we were talking about how Delta flipped, right? It wasn't that strong. Nothing was over 2.5 billion. Nothing was even over a billion. So can we trust it? We can't. We can't trust that level of Delta. Visually, it looks correct for us to believe in a bullish bias. But if you just look at the numbers, right? That's why we do all these studies, and that's why we do these studies for you guys, right? The numbers told us that it's actually not that strong. Okay? How many million for strong gamma? It's usually 70 plus, but we'll probably go over that another time. Again, the basis of our analysis starts from delta. Delta is always our primary look first because we need to see, right? Delta tells us what? Where people are already positioned, right? If you're going to make a decision on where price is going to go, you need to look at the deltas first. Moving on, we're going to go to the next one. Okay, so we caught that delta flip, right? We all know that yesterday we made bank. Today, not so much, right? Today we didn't lose money. We didn't lose money today, but we made money betting on non-direction. Who made money today making a bet on non-direction? And who tried to actually trade this today? So let's zoom it forward. Let's go to expiration 22. We're gonna go to here, and we're gonna go to the open because I want to show you what the open looked like, and I want to tell you why. I want to tell you why that I think betting on non-direction made more sense than actually trying to chase the 71.50, right? How did you get so tall, dark, and handsome? Oof, that's a good question. Tell that to my wife. Let me tell you, man. I don't want to say it on stream, but she has been loving this guy right now that she saw in a Chinese drama. If anyone's watching Pursuit of Jade, just letting you all know. I have to remind her that she's married. Remind her. You remember me, right? Remember? Just trying to make sure you didn't forget your husband here. Okay, so what do we see? Right? It's kind of like the same thing that we saw yesterday. If we look at just the raw deltas and we choose and we say to ourselves, like, are we going to join? If we're going to join one side of the army, which side of the army are we joining? We're joining Green Army, right? Because we're going to follow the momentum, the trend. Everyone seems to be already long deltas. But what did we just discuss in that when we were looking at yesterday? Nothing over 2.5 billion. So we know that if the market did want to make a flip here, it would be very easy for them to do so. We're already starting the day with a negative 71.50. Now there is a trade structure that we talk about. It's called the delta contraction trade structure, where when price or as price moves forward, we have a 71.50, this negative strike, just buy back up, and the act of them buying this short delta back, it would likely cause the market to actually make a volatile move up. That's kind of what we expected. It's what we wanted to see happen. It obviously didn't happen until like the end of the day. We got this volatile, like a little bit of a volatile move back up. But we're always drawing on our heads like SRS, right? Scenario, risk, structure. What's the most likely scenario for price based on what we're seeing? From the open, we thought that it would probably be an upside. Now we opened at 71 like 20s, right? 71.18ish. It would be worthy bet to capitalize on a move towards 71.50, especially with all this gamma exposure up there. But I'm gonna leave that up to you. If that's enough of a move directionally for you, by all means, we should take that trade. Um, but how else did we know that it's not going to be a big moving day? Two things. We opened at IV well under 20%, and IV continued to drop throughout the day. Like in the first 30 minutes, we saw that IV started to come all the way down to 16.8 from a high of 19.09. We need volatility for price to make big moves, and we just did not have that happen today. Also, throughout the day, I want to take you to Delta. When it starts zooming forward, we can kind of see that it was kind of getting flimsy, right? We started to lose the strike of 71.10. Someone decided to short this strike, although 71.50 was being bought back. If we start going forward again, at this point, it looked like someone was going to make a push up, right? They bought back the 71.50s, but it quickly, throughout the day, it quickly just kind of died down. And then we started to get these short deltas again. So throughout this entire process, right, nothing was showing over 2 billion. We continued to just kind of get a whole lot of nothing. Volatility was dropping very, very, very fast. And again, you need volatility in order for price to make big moves. We just didn't have it. We did not have it. So when we are deciphering this kind of price action, it's not going to be, we're not going to win every trade, right? We never ended up getting to that 71.50. But we do know the most likely scenario is that price isn't going to come down. Do we understand that portion, right? So what strikes did we sell today into the market? And we also doubled down. We doubled down on our put credit spreads as well. And hopefully, for those guys that followed me, you let them expire, because we knew that price was not going to make a leg, like any sort of downward move. So take a look at the strikes here, right? Let me delete that picture there, remove all forward drawings. So we're looking at this area now here, right? Oh my God, I swear I can draw a straight line. So we're looking at this box right here, okay? So what was the strike that we sold? We said below the gap, right? We said we wanted to sell below the gap. So 70.60. That was our first strike sold. And then we ended up selling the 70.55 as well, because as we got a volatile move down, like right here, we said that this is worthy of doubling down. So we doubled down, right? The idea is that we know price is more likely to go up than it is to come down at this point in time, based on the delta profile, based on the net drift, based on IV. Not only that, we also made the assumption that prices, if we are going to make a volatile move up, a volatile move at all, it's more likely to go up than it is to go down. So we sell puts, we sold puts, and if price didn't move up, at least it wasn't going to come down. Right? So that's how we navigated the day. We know that today as well, there's no catalyst, there's no news. And with that being understood, what more can we do, right? We're not going to be chasing the stars for a 30-point move on SPX. It's just not enough for us to put, for us to debit, right? We'd rather the market pay us for these efforts. So that's kind of the recap. I'm going to open up the floor now to some questions. Congratulations to those who doubled down on the long with me. Obviously, the market didn't do a whole lot today, but at least things expired. And for me, personally, I believe that utilizing data like this, utilizing our studies and probability metrics, right? Everything we post on Twitter has a percentage on it. And they're exact percentages, right? It's not like some of these other guys that you see posting, 3 candles in a row, it's going to be a big bullish move, and then you ask them, okay, well, how often does this happen? Well, I don't know, man. I think I've seen like 70%, 75%. I ain't ever seen someone say 72%, right? What do I say? 72% of the time, the market touches the MVC when we're trading in a 20% IV, right? That's all I have to say. So if you like this stuff, this is how you want to trade. You want to use numbers and metrics like that. Stick around. We'll be live tomorrow again. Hopefully I make some money, right? Today we made a little bit of money. We made $390. It's not a lot, but it's enough for me to sleep indoors tonight. Otherwise, the wife's gonna kick my ass out. So yeah, we're gonna open the floor to Q&A now. And for those guys watching YouTube, thank you very much. Join us tomorrow for live stream, man. We're gonna trade again. Give me 1 second here.